Hi guys! Welcome to my vlog! So, for today's video, I will share to you my some knowledge about one of the lessons in accounting, which is financial statement analysis. But with a twist. So, I have here a jar with papers inside, and this paper contains the questions that I asked from my classmates, because I asked them to give me a questions that is related to horizontal analysis and vertical analysis. But before we are going to pick a question, first I will explain to you what is financial statement. Financial statement is the process of reviewing and analyzing a company's financial statement to make better economic decision to earn income in future. These statements include the income statement, balance sheet, statement of cash flow, note to accounts, and a statement of changes in equity. Financial statement analysis is a method or process involving specific techniques for evaluating risk, performance, financial health, and future prospects of an organization. The purpose of financial statement analysis is to help the manager and the owners to confirm past expectation, evaluating present results, and to predict future outcomes. So now we are going to pick a question. What is vertical analysis? So, vertical analysis is the method of analyzing financial results, expressing each financial statement, account, and element as a component or a base. So, next question is, how to compute vertical and horizontal analysis. So later on, I will show to you how to compute horizontal and vertical analysis. So last question, guys. Great. What is horizontal analysis? So horizontal analysis is a method of comparing and analyzing financial results of different accounting periods in each financial statement, account, and element.
How to compute horizontal and vertical analysis. So I have here an example of comparative balance sheet. But before we compute the horizontal analysis and vertical analysis, I will introduce to you first what are the formulas that we are going to use. In horizontal analysis, these are the formula that we are going to use. Amount change is equal to current year minus the base year. In percentage change, amount change over base year times 100%. In vertical analysis, so this is the formula that we are going to use. Common size is equals to entity over base times 100. So now we are going to compute the amount change. So by following the formula, current year is equals to 500,000 minus the base year, which is 400,000, is equals to 100,000. So that is the amount change in the cash. So if you are using Excel or Google Sheet, you don't have to compute it one by one. You just have to drag this so that you can get the total amount change. Just put bottom border here and as well as in percentage change following the formula, amount change over the base year 400,000 is equals to 25%. The same thing, we just have to drag this, and that's the percentage change. Put bottom border and bold this if you want and adjust the size. So that's the advantage if you are using Excel, because you are not going to compute one by one, just have to drag. But if not, just follow the formula and compute it one by one. So let's try in liabilities and capital. So 151,500 is our current year minus the base year 100,000 is equals to 51,500. Drag, and that's it. And so you can identify here if your amount change is balanced. So as in the percentage, amount change over base year is equals to 51.50%. Then drag, that's the percentage change. This is how you check your work. So first, you just have to multiply mul- multiply the base year to the percentage change. So the answer is 100,000. 100,000 plus the base year, which is 400,000, is equals to 500,000. So that's how are you going to check. If negative, you just have to subtract 31,500 from 90,000. So the answer is 58,000. As well as in the other entities, the same thing, just have to multiply the base year to the percentage change, and the answer is the amount change. Amount change plus the base year is equals to the current year. So let's move on in vertical analysis. In vertical analysis, we are just going to compute the common size. By the way, the other term of vertical analysis is common size analysis. So what am I going to do is I will just divide the entity to the base, which is our base is the total asset and the total liabilities and capital. And it should be 100%. So let's try in the cash. 500,000 over 1,066,500 is equals to 46.88%. In accounts receivable, 58,500 over 1,066,500 is equals to 5.49%. In supplies, 28,000 over 1,066,500 is equals to 2.63%. Inland, 360,000 is over 1,066,500 is equals to 33.76%. In equipment, 120,000 over 1,066,500 is equals to 11.25%. As what I have said that total asset, it should be 100%. So let's check if 100%. So sum, open parenthesis, drag this, close. So it is 100%. Also, and 2019 common size, the same thing, we are just going to divide the cash from the base, which is 950,000. In accounts receivable, 90,000 over 950,000 is equals to 9.47%. In supplies, 40,000 over 950,000 is equals to 4.21%. In land, 300,000 over 950,000 is equals to 31.58. 120,000 over 950,000 is equals to 12.63%. So let's check if this is correct. Drag this. The same thing in liabilities and capital. We are just going to divide this in the base, which is 151,500 over 1,066,500 equals 14.21%. Through 200,000 over 1,066,500 is equals to 18.75. 715,000 over 1,066,500 is equals to 67.4. So let's check if this is 100%. Open parenthesis, drag, close. So it is correct. So the same thing, 100,000 over 950 is equals to 10.53%. In notes payable, 200,000 over 950,000 is equals to 21.05. In capital, 650,000 over 950,000 is equals to 68.42%. So let's check if this is 100%. Drag, close, parentheses, and enter. So just going to adjust the size of font and bold this one. Yeah, that's it. This is how are you going to compute the vertical analysis.
That's all, guys. Thank you for watching, and I hope you learned something from me. And if you want to learn more, subscribe and click the notification bell for you to be updated to my upcoming vlogs. So that's all. Thank you, guys. Bye bye.